Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up-to-date price analysis and market information. Something aside from the markets, I really saw some pictures coming out of St. Martin, and it was absolutely battered by Hurricane Irma. So if you are in the path of that storm, let's hope it decreases, but it's looking very dangerous at this moment. I have been through a number of hurricanes myself. Luckily, I am not in the path this time. I'm not in Florida, so that's good. So everybody in that state and all throughout the Caribbean, especially, remain safe, because those pictures out of St. Martin, it's just absolutely horrendous. And I hear some other islands have been hit, Anguilla, Barbuda, but really St. Martin I'm seeing the pictures of now. Okay, now moving on to the stock market. The S&P 500 had a fairly good day today. The market rebounded. It curiously enough, it didn't really close above the high that was made on yesterday. As you can see, this high here. When we see these rebounds, we love to see the market rebound above it. That would signal to us that the bulls are gaining some momentum or are stronger than they are now. But the markets did. Well, as of the time of this recording, it is looking like it will end on a positive note. So the Dow Jones Industrial Average, just to give you an overall recap of what's happening, and we'll also take a look at. We're going to take a look at some stocks, but I've been getting some questions about some ETFs. So I will also take a look at some ETFs that are doing fairly well. But the Dow is up 81 points, or 0.38%. The Nasdaq up 23.37%. The S&P 500 up 10, or 0.41%. The volatility index is down 5%. Overseas, the FTSE was down 18 today. The DAX was up 90. The CAC 40 was up 14, and the Nikkei in Japan was down 27. The Shanghai market was up 1.56%. So a mixed picture, mostly up markets, with the exception of Japan and the FTSE over there in London. Now, looking at the technical picture of the S&P 500, let's just take a look at the 4-hour chart. What we want to see is the market close above this level, around 24.75 or so. The market needs to close above there, and then once it does that, it will attempt to challenge this all-time high. This all-time high is up at roughly 24.90, and this is a futures chart, but it essentially shows what's happening with S&P 500. So we're at all-time high is just shy of the 24.90 region. If we close above 24.90, we would see some stocks continue to move to the upside, and optimism continue to reign in on Wall Street. Yes, the market is a bit exhausted. Yes, we have been moving upwards in almost a straight line since November of last year. This started right after the election, and the market has just really been moving upwards. So it is due for some sort of correction, but at this current time, the market is up, the trend is up. So you should be looking at buying opportunities, or if you are fully invested, you should be looking to tighten your stops under some of these moves. Looking at the Dow, similar situation. Let's just take a look at the Dow futures. Similar situation where the market is poised just below the all-time high, near that 22,200 region, and we are just bidding time. Market is not really moving fast. It is not doing slowly. It is just wading in and out between support and resistance, as you can see here. Taking a look at the US dollar. US dollar index continues to try and challenge this support area. The market was down today. Market was down, and as we approach the support area around the 92 region, the market rallied. The actual low was 91.98, and as soon as it hit that 91.98, we saw a rally happen in the dollar. So the dollar is still trying to form a bottom and trying to see if the dollar bulls or the buyers can keep this market above this 92 region. It looks like a battle we have on our hands. If we do slip and close below 92, that will be fairly bearish for the market, or for the dollar. But if we do bounce from here, that will give some short-term, at least some short-term support in the US dollar. Taking a look at the gold market today, gold pulled back to its breakout point, or one of its resistance points. Remember, I told you about these resistance areas. Market essentially trading at this resistance area, because for charting, once a market breaks that resistance, this resistance oftentimes becomes support, and the market often trades back down to the old resistance area. So that looks like it's what's happening here in the gold market. So 4-hour chart, we see that the market is just about on the line. So what we want to see is if we have some follow through buying tomorrow in gold, that would be fairly positive for this market. Another market that in a breakout scenario is copper. Copper continues to move to the upside, and we're approaching resistance, some longer term resistance, where this red line is drawn near that 325 region in copper. Okay, now looking at some, let's just take a look at the silver market first. Silver, last time I checked, silver was up on the day and reversed. Similar situation to gold, where the market traded to the upside here on the day, and then we had a reversal later on in the day, and this reversal looks like the market could trade back down to this previous resistance area. There, that red line, previous resistance area, could offer some support. And notice I said could, because just because the quote unquote, and let me put this in loose quotes, so suppose just because the rules say that the market could trade back down to support and find support, or trade above resistance and then find support at the old resistance, that does not mean it will happen 100% of the time, or even 50% of the time, because the markets can do whatever it wants to do. I'm just giving you a basic guideline of what normally happens or what can happen. Okay, so silver traded through resistance, and we could see the market come back down to test this resistance area that could form new support. Also, with the precious metals, it won't be unusual for the market to even have a deeper pullback. It's not unusual for the markets to top out here and then we have a deeper pullback. That will shake out a lot of the weak longs, the people who are not as bullish, and a good strategy would be to buy that dip if we do get a good buy signal. Okay, now let's take a look at some ETFs. ETFs that have done well, because oftentimes I speak about copper, I speak about gold, and some of you write in to say that we don't have an opportunity to buy copper. or we don't have an opportunity to buy gold. But how you can expose yourself to gold, copper, some of these commodities, or even some of the sectors. For example, we are going to speak about the internet sector. You can expose yourself through ETFs. Okay, so the ETF that mirrors copper, it doesn't mirror it 100%, but it closely mirrors what's happening in copper, is JJC. And ETFs essentially give you a way to diversify your portfolio out of just stocks alone. So as we can see, JJC has done fairly well. It's almost mirroring the breakout we saw in copper. Copper first broke out in November, where the market traded above the 26 region, and we're currently at 36. We had a period of, after this initial break, we had a period of consolidation, and the market has broken out again and continues to move to the upside. So a good way to expose yourself to something like copper is this copper ETF, JJC. Very good ETF. Looking at, I think most people know the GLD ETF is how we. GLD is a gold ETF. It actually has an element of silver too, so it tracks both gold and silver. But this is a way to expose yourself to gold in the long term with GLD. Now, taking a look at a sector that was very hot for the last, or a couple of years ago, fell out of favor because the market topped out, but it's looking like we could see the market perk up, is IBB. This is the biotechnology index. Now, I know a lot of folks are saying that the S&P 500 may top out soon, and this is not a good buy. But historically, IBB has done very well. We saw the huge run-up in 2009, from 2009 to 2015, and I earlier in the week I did a video on this for some members, pointing out that IBB could be a good prospect to keep an eye out on for the upside. Resistance is up at the 400 region since the market bottomed at the 250. We're currently just slowly moving to the upside, so this is something to keep an eye out on. Naturally, if the S&P 500 turns to the downside, it will bring down something like IBB. But for now, the trend is up. As normal, when you invest in these ETFs, when you invest in any market, keep your stop losses under the market. When I speak about markets are good prospects, there's always an exit point. There's always a point to say, okay, if the market hits this level, let's say that level is 310 or 300. If the market hits 300 or 290 or whatever it is, you are out of that market. You cut your losses short, and that's one of the keys to successful investing. Cut your losses short, let your profits run. Often investors do the very opposite. They hold on to their losses, thinking the market will turn around. It will turn around. It will turn around. Market doesn't really turn around, and a small loss can result or can end up in a fairly large loss. So remember to cut your losses short. So those were some ETFs that are on the radio, or the radar, sorry, that have a potential to move to the upside, and that has been moving to the upside in the case of copper. And IBB will just keep an eye out on further. Now, the final ETF. I do get a lot of questions about ETFs. And on this show, we really try to cover all different markets, so investors really get a broader view of the markets, and just not stocks alone. Okay, so this is the internet portfolio ETF, another ETF that has done fairly well, as you can see from the market. This market bottomed in 2016, March 2016. It has moved from 60 and the high was 115. So the value of this ETF has almost doubled. It's currently at the 109 region. ETFs, there's a common myth out there that ETFs can't offer good growth potential. Well, I just showed you IBB. I showed you this PNQI, the PowerShares internet portfolio, has done very well. I have been monitoring this for a while, and it has really done well. Before I sign out, let's just take a look at Netflix. I'm not watching Netflix. Look at the stock, because the stock is perking back up again near the all-time high, just around that 190 region. And someone asks, what is the prognosis on Netflix? And Netflix at this point in time is a hold. If you're long Netflix, I would hold this stock. It has offered some lovely profits over the last couple of months to even years, and the trend is up, and the market is positive. Naturally, you have to have, again, just because I said the market is positive, that doesn't mean it will be positive in a week. Naturally, you have your stop losses below the market, 160 or 150 or wherever you put your stop loss. At least have that exit point, so if the market turns, you can take profits on your positions. Okay, so that's it for today's episode. Tomorrow we'll be looking at some more individual stocks. And I am Beyond Dale. Thank you very much for listening. Subscribe to the channel and like the video if you found it informative. Thank you very much, and I hope you have a wonderful day.